everyone. Welcome back to episode number 9 of Laugh Loans. I'm Myra Talley.
And I'm Shelly Panzarella.
We took a little bit of a break there.
We did. What's cool is our fan club, your fan club specifically, was looking out for us and like, hey, where are you guys at?
Yeah, so I apologize for that little break, but we're back. And we have lots of information for you guys today.
Yes, lots of information.
Yeah, we're going to start off with some great news. We actually saw a big improvement in rates today. I would say today our rates are at 6.875.
Yay! We are tiptoeing into the sixes. So as of today, so today is November 10th when we're recording this, they came out with the CPI numbers, which is your consumer protect. What is that? Consumer. It's your consumer price index. I was going to say consumer protection information, but that's not it. The consumer price index, which actually came out better than expected. So it came in 0.2 below expectations, which seems like so little. But the reality of it, with all of the stuff that's been happening in the market, like this is actually an improvement in their mind.
Great, yeah.
And so that actually made our market, our interest rate market, the bonds, rally, which is why we're seeing rates about 0.5% improve today.
Correct. And that just came from our recent increase.
Correct. Yeah. So the Fed spoke November 2nd, and in that meeting, he did increase the Fed fund rates by 0.75, so 0.75. And he also indicated at that time that he did not see him stopping, basically, that they would continue to do this. There's another meeting that's going to happen on December 14th, and they're stating about, what, half a point?
Half a point. They did say that maybe they're not going to go at it so aggressively.
Yeah.
So we'll see how, that turns out in their meeting in December, whether it be another, 0.75 or another half a point increase. We'll see where that takes us then.
But they are saying that they will do it again into 2023. So, and that actually, like you had said, like you had mentioned, it did increase the rates. As he was speaking, like we were getting the, lock or alert to lock. And so we saw the volatility happen that afternoon, almost 0.25%, right?
Right.
Into the next morning. So this is a breath of fresh air. I think this is something that we've all been kind of looking forward to. One was the elections. There was some thought around what that was going to look like. And then also the CPI, the consumer price index, consumer price index, being where it's at. And that I think is creating a little bit of certainty in the market, which certainty meaning that they feel like things are headed in the right direction.
Yeah. Well, even, as of like a week ago, I quoted out for a, great credit score condo purchase at 7.5. When I repriced that today, it priced out at that 6.875, which, that's just over the course of 2 weeks.
Yeah. Yeah. So I think that's great news. I mean, a lot of people right now are sitting on the sidelines, just hearing the news about rates and where they're at. And I think really waiting, to see what's going to happen. Because there's some rumor that, there's been some people who feel like rates are going to head up into the 10s. And then there's some who feel like rates are going to hopefully come. I don't think we're going to see the 2s and 3s, but even if we got to 5%,
I agree.
That would be I think that'd still be a great rate.
I think so too. See, I don't think that will go low either. 5 or 6 is where I kind of estimate that rates will go. So if we're already seeing a 6.875, all these people waiting on the sidelines, waiting,
this could be the time.
Yeah, this could be the time and be that difference.
Yeah, I actually was talking to an agent yesterday who watches the Las Vegas market. I'll give a shout out to Michael Johnson. So he, with Trust Home Real Estate. Woo. So he mentioned that one of the things he noticed week over week, so for the last few months, we've exceeded listings, meaning that we haven't had enough purchase contracts. And so the listings, which is why we have more inventory, the listings on a week to week basis was actually more by like 200. We had 200 more listings than we had sales. For the first time in a while, that flipped. So I think he mentioned we had 500 listings and we had 700 sales. Something like, meaning that if that happens, right, if people stop listing their homes, the rates start to dip, guess what we're going to be back towards?
We're going to be back to the same place where we started,
right,
where we were short on inventory.
Exactly.
And people were bidding multiple offers on homes, and it's all different.
Yeah. Yeah, which leads me to an article that I saw. So it said 72% of recent home buyers have regrets about their purchases last year, or I guess coming into this year. As the market cools, it talks a little bit about the steps that you can avoid in disappointment, but I wanted to share some of these stats. So last year, 2021 to 2022, I guess we are still in 2022, although we're at the tail end of it, 31% of buyers said they paid over asking price. The median amount paid over listing price was $65,000.
Wow.
And I know we saw a lot of that, and that was like the norm, but not 65,000.
Not 65,000. Well, I think it's just depending on what state you're from. I don't think that we saw a lot of that here. I did see 50,000, but
depending on your price point, probably.
Right.
Yeah.
But it just probably in San Francisco or stuff like that, where the house prices are a lot more. Maybe that was normal.
Yeah, and now we're seeing $65,000 price reduction today, right? It also said 36%. A tight competition, 36% to make an offer on a home without even seeing the home in person.
Yeah.
Could you do that?
I don't think that I could personally do that, but I mean, it was a thing, and it still is today. Agents are FaceTiming their clients, and that's how they're putting in the offer. Sometimes homes would just come up like for sale, and it would fit the boxes, but they didn't see it, and clients were like, "All right, just write an offer. We'll deal with it later."
Yeah. Speaking of that, 80% of buyers saying they made more than one offer on a property, 41% making 5 offers or more, and about 1 in 3 buyers said that they searched for 3 months for their homes, while 1 in 8 took 6 months or more to find that home.
Wow.
So this market is completely different.
Completely.
Right? I mean, there are some homes that are sitting on the market without even getting showings at all. So three moves to avoid regrets when buying a home. Number 1 is to insist on a home inspection, which I actually talked to a home inspector, and he mentioned that he was slow during 2020 tail end of 2021 to 2022 because not every home buyer elected to get a home inspection.
They just wanted to get forward through the process.
Right, which I think is kind of crazy. I mean, that, and I know the appraisal side of it too. There are a lot of people waiving that.
Yeah.
But a home inspection.
Yeah, I actually just had one of my contracts just canceled due to the home inspection.
Now,
Yeah, and believe it or not, it was a short sale that they were purchasing. It was approved through the bank, and when the home inspector went in there was a lot wrong with the electricity and just a lot of things that was going to cost the buyer, a lot of money to fix had they not had that home inspection.
And the seller wasn't willing, probably not because he couldn't. Oh, okay. I can't even believe you said that. So it's a short sale.
Yeah.
Meaning that the buyer was selling the house for less than
what he
owed. Wow. Do you know when the seller actually bought that house?
I don't know.
Wow. So I think that's going to be something that we're going to start to see too. Number 2 is ask for seller concession. So speaking to the environment today, normally maybe with a traditional resale, that seller would have probably had been motivated to fix the items. I mean, I'm seeing that, right?
Oh yeah, absolutely. We're seeing bigger sales, seller contributions than we've seen in a very long time.
Yeah, I have a client today that the seller. So originally they did a $10,000 sales price reduction. Come to find out that the buyer needed to pay off some additional debts to qualify, and so the seller was willing to pay for all of his closing costs. And now there's some additional things that have to happen, and the seller basically is giving the full 6% on an FHA loan for seller contribution to make this transaction go through. And it's been, I don't normally say we have any delays in closing, but this has been one situation that it's been something because of a borrower that we've learned and gotten through time. But that's just how, this is what we're seeing in our market where sellers are doing these types of things.
And if you think about it, so most of these sellers have equity in their homes, and maybe that home sat for 2 or 3 months. And in order for them to purchase a new home, they have to get rid of that existing home. So they're motivated to get rid of this. And if they want to contribute, let's just say it was an additional $5,000-$6,000 to them, it's like, hey, it's better than that home sitting on the market for another 2 months.
Totally.
So
yeah, I mean, and I think the 2-1 buy down that we keep, encouraging everybody to take a look at, even rate buy downs, especially today with where the rates have just dropped down to, I mean, you could realistically get into the 5s with buying down 2 discount points, probably, and maybe even 4 if you wanted to get even further into that. But but I do think right now they're saying to ask for seller concessions. That's one thing to look at today versus I guess early 2022. And then number 3 is find a real estate agent who's in your corner, which I agree. You definitely have to work with a professional, not only a lender, but definitely a realtor who is working on your side, who also works with the lender to know, to kind of game plan and strategize on what the best way to get into this home is for you as a borrower.
Yeah.
Right?
And at the end of the day, I mean, the 3 of us are a team.
Absolutely.
So you as the buyer, the real estate agent, and ourselves, and title included. But, we're all in it for the same reason, and that's to close on your home.
Yeah. Yeah. And I think, most of our business is in partnership with our realtors.
Yeah.
We also have the opportunity though to get buyers like through our podcast, right? That come to us and talk about, they don't necessarily have a realtor. And so us being able to partner with realtors who we work with and trust, we can connect them to the right realtor partner.
Yeah. And, we, with our realtor partners, we always share knowledge amongst each other. So they're sharing knowledge with us, or, vice versa.
Yeah. Yeah. So I also want to share, I know we're going to talk about, you want to talk about consumer debt?
Sure. So I was reading this article that said consumer debt is up by the largest it's been in over 20 years.
What does that even mean? So like people buying all these fancy cars?
Yeah.
Credit
so it
card
says
spending?
over the past year, credit card debt has jumped by 100 billion or 13%. That's the biggest increase in more than 20 years. Credit cards typically charge a high interest rates when balance aren't fully paid off, making this an expensive form of debt. So, with inflation going up, people are not spending less.
Yeah, they're just charging it.
They're just charging more. And, was it over the past 9 months is where this data came from. So the fact that it increased that much so fast.
Yeah.
The one thing with debt, though, there's a limit. And I know we've talked about it on here before. It's like there's a ton of credit cards, but each one of those credit cards has a limit. And eventually that spending has to stop. And you obviously have to repay that back, and if you hit the limit, well, there you go. Your spending is stopped.
Yeah. So somebody had mentioned that it's kind of a combination of the stimulus funds that were coming in. So for 2021, a lot of people had that. So the funds were rolling, right? And then you had the credit card debt at the time, which weren't maxed out yet, right? So now you have that happening. So a lot of people are reducing their savings funds, and they're also getting into higher consumer debt, like you're mentioning. So, I mean, a couple things that we're looking at, especially when rates start to dip like this, is tapping into some of that equity in doing a consolidation or cash out refinance or home equity line of credit, which could help to free up your total monthly payments and allow you to get financing, and do a mortgage loan basically. So you have interest, which could be tax deductible.
True. And I think a lot of people think of it as like, hey, my interest rate right now is, 3% or wherever you may be. And if I refinance, my interest rate will go up to 6% or whatever the case is. So maybe payment wise, maybe that's what, $300-400 or something like that. But what if your debt, you can get rid of, $1,000 of monthly debt. Now you're actually only paying an additional, you're actually saving $700 a month, $600 a month.
And if you decided that you wanted to actually pay that difference, so let's say it's $600 total monthly debt that you'd be saving, if you applied that to the mortgage, that would act, because it's a fixed rate and it's a lower overall rate versus your credit card debt, and it's fixed versus revolving, you would actually pay down your total debt, including the house, faster. Right? If you apply that full $600 to $700 savings that you have.
And I think that's what sometimes what's so confusing about refinance is because people feel they don't want to change what they currently have.
Sure.
But it's all about just gathering the information and knowing what works for you.
Absolutely.
And that's why it's so important to talk to a lender who is actually going to guide you through the process and put these numbers into perspective, because just because your friend has this or tells you that not to do it, it may not necessarily be the right thing for you.
Right.
So, ignore all the noise.
Yeah. And that's a great point. I think the noise is why people don't take action a lot, right?
Right.
Or even in buying a home, the noise right now is so loud about the rates where they're at. But if you have to sell or you have to buy a house, like avoid hearing those things and talk to professionals who can lead you and guide you through. And to your point, I mean, if you have somebody who's telling you have to do an equity line or a cash out refinance, and you side by side to what you have today, or you don't feel good about doing that, and that person is still trying to encourage you to do it, you definitely want to seek other consult, right? Just because they might not be looking in your best interest. I think if you find somebody who really lays it out for you, gives you different scenarios and options, and you make the best choice for what's important for you and your family, that would be the right choice.
Right.
Right. So I wanted to share this. This was pulled up from NAR, National Association of Realtors. It's their 2022 profile of home buyers and sellers. This I thought was kind of interesting. So 20% of all residential real estate purchases were made by first-time home buyers. Do you think that's up or down from last year?
From last year, I probably up.
That is down. So fewer first-time home buyers purchased a home this year versus last year. That's down from 34% in 2021 and 50% in 2010, which I don't even remember. 2010. Were you in the industry then?
No.
That was just coming out of the crash, or the housing crisis, as we call it. All right. The age of a typical first-time home buyer has grown to 36 years old versus 33 in 2021. Isn't that weird? Wow. 3 years in people buying?
Yeah, because first-time home buyers were thrown out of the market.
Just based off the price point?
Yeah.
And they're saying first-time home buyers are older as a result of having to save for down payment longer. Which I was like, still the same, but I get it, because truly, down payment assistance is kind of gone for right now, right? Like it hasn't really been, it's still here, but not as many people are utilizing it. The age of the typical repeat buyer, so meaning you've bought a home and you're now you're either buying a second home to move up or move down in size, grew from age 56 to 59 years old. So you're older as you're moving up.
Oh, that was in that. I did read that article, and it said the average length of time that you stay in a home has also increased. What was it before? Like
5 years.
5 years, and now it's over 10.
I mean, I'm pretty sure that I'm skewing that number because I've been in my home for 16 years.
Yeah.
So I might have been pushing that number to the other side, but
it was probably a little bit more than 10. I think it was like 15 years is what the article said.
15. That's a long
time,
right?
So first-time homebuyers typically get in, live there for a few years, move out, but now they're saying they're staying there a little bit longer.
And maybe that's because of our current. I mean, even 15 years, right? Over the course of 10 years, we've been on a gradual appreciation.
Yeah.
We probably saw more move-up buyers in 21 and 22, or just because of the rates.
Which is why, again, first-time homebuyers were kind of
down
because all those move-up buyers, they had the equity to be able to give the over asking price.
Yes, yeah, you're right. Good point there. All right, what else do we got?
We have the IRS. They have decided to increase how much you can contribute to your 401k. So this is the largest increase that they've given. So it went from you being able to contribute $19,500. It's gone up to $22,500.
That's awesome. And then for IRAs have
gone up from $6,000 to $6,500.
Which, speaking to mortgages, that is something that I think people forget about, that they have the ability to actually utilize their 401k for loans, or loans or withdrawals for home ownership. And it actually might be better than pulling from a down payment assistance, although that if you stay in it for 3 years or longer, it would be in most cases forgiven. Mm-hmm. But if you have the 401k, you can actually utilize that towards the down payment.
Yeah, and they've streamlined the process so much now. I remember, when I first got into the business, it was like you had to start right when you went into contract if you wanted that money by the time of closing.
You're right, yeah.
And now it literally within a few days, buyers are getting their money, and it's so much easier than what it was before.
Yeah. I know that used to be a thing, I think, when the listing agents, and we're like, oh, well, they got a 401k, and that would be like, well, they need to start now. Like, we haven't even accepted the contract yet.
Yeah.
But that needs to happen now. And
Like,
you're right.
we need to submit a purchase contract with this.
Right? And a good faith estimate or a loan estimate or whatever
Yeah.
you would call it. So that's awesome news, actually. So that I think is another indication for savings, which if you haven't seen lately, I was actually pretty shocked. Savings rates, obviously that's what happens when the Fed increases rates, the bank rates also go up. I saw a CD, a 12-month CD paying out at 4%. I haven't, like, 4% in interest that you're receiving, not that you're paying out, you're actually receiving that. So definitely take a look at your savings rates too. If you do have some cash, it would be a good opportunity for you to put into your 401k as well as CDs. You're going to pull up the chicken and pickle?
Yeah.
Chicken and pickle?
We got some, it's been about a week or two since they've announced this, but the chicken and pickle that's coming here, it's going to be, where is that? Like by the
over by
stadium?
or
the practice
Raiders.
facility,
Yep.
I'm sorry.
Yep.
Yeah. So it's going to be, they're going to have pickleball, they're going to have restaurants. It's going to be a combination of indoor, outdoor space. It seems pretty cool.
It does. So it's what, a chicken restaurant, right? That's basically that's happening. I'm sure there's going to be beer and stuff in there, but I mean the craze around pickleball is insane. Like, so I don't know, your boy Tom Brady, did you know he bought a pickleball team?
Did he really? I did not know that.
I've been checking out his assets now that he's divorced from Giselle. But apparently,
so what
this
you're
is
saying is
exactly get into pickleball, Myra.
Yes.
But I think there's a lot of other big stars that are actually buying teams, which I had no idea that was like a thing.
Yeah, it's like, well, I read that it's the fastest growing sport in the U.S.
Wow. So have you played it at all?
Never even seen it played. So
it's
Sunday.
It's like, yes, check out Myra at Sunset Park. She's sponsoring an event. You're not playing though, huh?
Maybe, we'll see.
Yeah, picking up a racket. But this chicken and pickle will be a cool addition to Vegas, right?
Yeah.
In general, to have a cool hangout spot. Honestly, so my husband and I will play. I'm learning to play a sport as a hobby, so to speak. And golf seems to be a little bit difficult for me to eye-hand coordination, but pickleball seems to be great. But we play at Lifetime, and they are actually nervous, about what this will actually pull, because it's this is, open to the public. Lifetime is specific to membership. And so, I love Lifetime and all that other stuff. So, but this might actually pull from the audience here at Lifetime here in Green Valley. Plus, you get to eat and drink inside of that and have a good time there.
Much more fun. They
Totally.
even have a dog park.
Do they?
Yeah, I read. So
Did it say when they're opening?
They just said
We'll have to do
sometime
our
next
show
year.
there when the grand opening is. Can we just get a little section by ourselves?
Yeah, exactly.
Play some ping pong table.
We'll do a live pickleball.
There you go. You heard it here. When it opens, we will get that. Since our fan club is looking out for us. Well, awesome. Well, that was a lot of information that we got. We will do our next one. I think we're gonna do it on the 23rd. Mm-hmm. We're gonna come live, so we'll publish that information. You'll see this video go out next week. And with that, thank you so much for tuning in. Make sure you like and subscribe, share this information. And thank you guys for actually pushing us and encouraging us to keep on this. We're on episode 9, looking forward to episode 100. Anyways, that's a wrap.
Right,
take care.
bye.
Bye.